Good morning and welcome to the April 19 edition of SuperGrowth MultiBaggers, where we take a look at a company with particularly interesting financial statement trends. This morning, Ericson Telecommunications, Swedish manufacturer of telecommunications equipment, including for 5G. Its financial statement trends have been accelerating since it restructured a couple of years ago and look particularly promising. First, a very quick introduction to our research for those not familiar with it. We analyze financial statements in a detailed way. We compare all public company financial statements to all others, looking for emerging trends indicating significant potential. Trends, for instance, in margins, total liabilities, capital turnover, return on assets, sales growth, gross profit growth. We are looking, we're doing essentially what is Graham Dodd credit analysis applied to all public companies using software that we developed. We've run businesses, understand accounting, studied accounting, and know how to create software, develop software. So out of that comes SuperGrowth MultiBaggers. We try to emphasize facts. We don't predict the earnings, the economy, market. We leave that to others. There's lots of people happy to make all kinds of predictions on Seeking Alpha and other platforms. And we try to stick to facts, not conjecture, and do it in a very detailed way. Yogi Berra said you can learn a lot by looking, and we're looking. We're not, as I said, dealing with what we think may happen, but more with what the facts are. We try to really understand the facts, and it works. Okay, so we'll take a look quickly at the market first of risk. First, a quick look at market risk, looking at the S&P 500. In addition to the financial trend analysis software we develop and use, we also developed an artificial intelligence pattern recognition software that buys on weakness and sells on strength. So in essence, for instance, this graph might give you a very rough idea of how the software works. It becomes an enthusiastic buyer when the price dips below the red line, and a seller when it reaches an inordinately high level above the red line. In reality, it doesn't work off this red line at all, but specific numbers that are much more precise, down to a small fraction of 1%. But the basic idea is buy quality on weakness and sell it into inordinate strength. And we have been heavy sellers over the last couple of weeks. We're actually now about 94% in cash. A couple of weeks ago, we were actually the opposite, about 7% in cash. And that's pretty typical for us. Also, we've been wanting to switch out of high growth but declining momentum companies like Zoom and into growth companies with accelerating sales and return on assets trends. So switching to Ericson, a major producer of telecommunications equipment, including for 5G, with Nokia and Huawei. Ericsson controls 80% of the markets that it competes in, so relatively little competition. And it ranks 8 out of 62 of the high momentum SuperGrowth MultiBaggers on our list. Geopolitical friction with China may, on the one hand, hurt the company because it is in the process of a major expansion into China, and it may help the company, and actually seems to be in the shorter term, as particularly US but also European companies switch away from Chinese supplier like Huawei and into Ericsson and Nokia. We have no idea how that may evolve, but current financial statement trends indicate major potential. In terms of sales growth, Ericson is actually not particularly impressive. This top left of the four graphs shows sales growth, gross profit growth, considerably better. That's it. That indicates that the company is able to increase margins, increase prices, with relatively minimal impact on sales. Operating free cash flow trend much more impressive, and pre-tax free cash flow also very impressive. The rolling four-quarter numbers down here in the bottom left quadrant, pretty impressive. March 2020 down 0.1%, June up almost 1%, September up 4.4%, December up 6.7%, and that increasing momentum is something we found is a major positive indicator of future stock prices, and something that we've come to really focus on. Here looking at revenue and gross profit rate of change, so it's those numbers that I mentioned a moment ago expressed in graphs. Overall financial statement momentum, this takes a look at about 20 different financial strength criteria, ranging from cash as a percentage of total liabilities to free cash flow in relation to total liabilities, return on assets, interest coverage by operating free cash flow. So here you see a consistent trend since mid-2018, and this is a particularly good indicator of short-term stock price appreciation potential we found over the years working with this data. So taking a look now at I'll take a very quick look at the summary report here. So the three graphs, top one, free cash flow, return on assets. You see major improvement in both. Bottom one, stock price versus our estimate of intrinsic value. And we don't rely very much on this intrinsic value, but it's interesting to note. The reason we don't is because most of the best performing companies in our portfolio trade at major premiums to intrinsic value, or at least to our estimate of intrinsic value. But crucially important is this middle one that shows trends in financial strength. And we've, as I've said, found this to be a very reliable indicator of short-term stock price appreciation potential. Taking a look at the pricing algo for Ericson, indicates the buys and sells over the last year or so. Current indicated buy-at price just under $13, sell-at price close to $15. A lot of our subscribers totally ignore the sell-at price and just accumulate quality on weakness and hold it long term. Obviously, if you know the market and the stock are going to go up, that's what you want to do. By taking profits and turning those profits into cash, it does offer an investor the flexibility and the opportunity to take advantage in declines. And we're pretty focused on that part of in our own portfolio. We try to take advantage of advantageous pricing and also in terms of both the buy and the sell points. So over the last year or so, our average holding period in this stock's only been about 3 days. More typical is a little over a month. Average profit per transaction, 10%. The return annualized is a huge 1,200. You know, this is not really, this doesn't predict what's going to happen in the future at all. It just says the pattern recognition software is working off a pattern, which, if it repeats, will generate those kinds of returns. That's a huge if. All it does is provide a probability analysis. and and it's a fairly complicated subject to deal with in a few sentences. But the important thing is trading at $13.81, buy at just under $13, sell at close to 15. 6 and 7.5% are the respective distances from the buy at and sell at. That's it for today. Thank you for listening. We do risk analysis on client portfolios. Clients provide us with the names of the companies that they're either interested in or currently holding. We produce 12-page reports on each of those companies very inexpensively. It's important for investors to understand risk, including financial statement and price risk. And of course, we use this similar process to find companies with particularly attractive momentum in their. Finally, the e-newsletter that accompanies this video is important. There's information in that I forgot, or that is more detailed than can be easily put in the video. So check that out. risk-research-inc.com. And as always, please excuse the dog in the background. Poor old Fozzie Bear. Not happy when I put her in the next room, so I just bear through it. And thank you for your interest in the research, and I'll talk to you tomorrow.